Hey, what's up, everyone? This is Michael Elliott, CPA and founder at Camp and Park Accounting, and it has been a minute since I have been with you all. In fact, it's been about 5 years, and frankly, the reason we have not been active on our YouTube channel is we have just simply been inundated with requests to work with campgrounds and RV parks all over the United States over the past 5 years. And we've had just a tremendous opportunity to work with some of the best parks in both franchise systems and some of the best independent parks in almost every state in the United States. But I wanted to jump on here for just a minute to talk with you about valuation of campgrounds and RV parks. A lot has changed over the last 5 years since we last talked about valuation on this channel. One of the things that we saw happen is, of course, campgrounds and RV parks absolutely exploded coming out of COVID. Everyone wanted to go camping, everyone wanted to buy an RV. And because of that, campgrounds and RV parks experienced all time record levels of occupancy, all time record levels of revenue growth. It was an absolutely wild time from 2020 through 21, 22. We didn't even start seeing plateauing until end of 22 into 23. And what happened? Valuations, many of which are based on NOI and multiples of gross revenue, those things just exploded as well. In addition, we had record low interest rates that was pushing valuations up. And then we also saw big money, private equity, a variety of real estate funds, family offices, private investors that are high net worth individuals the money came pouring in to the industry, which caused valuations to absolutely skyrocket. So where are we at today is sort of the end of 2025. Where do things stand? Well, of course, we've got interest rates that are much higher than they were 2, 3 years ago. And as a result, that's sort of pushed some buyers to the sidelines. However, we're starting to see interest rates coming back down. What are we seeing in terms of the actual numbers inside of RV parks? Well, for the most part, most RV parks in the United States, they've sort of plateaued in the last 18 to 24 months. We're not seeing significant declines at most of our clients, most of the industry data throughout the country. We're not really seeing dramatic declines. We're actually at a point where we think we're about to call the new normal, a new baseline for occupancy for the average RV park in the US, which means that there's opportunity here for investors coming into the market to now build their performance around what we think is kind of the new normal and projecting out maybe sort of normal standardized growth of maybe 3, 5, 8% a year in their performance moving forward, with sort of inflation is down in terms of expenses, a little bit lower than it was a couple of years ago. And so we can also in our performance project a more steady rate of expense growth as well. So here's what happened with valuations pre-COVID. So, if we're looking at 2018, 2019, 2020, up until probably mid 2020, we were seeing valuations in the range of 4 times gross revenue. Now, you might be saying, Michael, valuing any business based on gross revenue is a dumb idea. And yes and no. It's definitely not traditional for the average real estate investment. However, it was a very traditional metric that was used for years in the campground industry. So campgrounds were trading at about 4 times gross revenue. What happened during COVID? We saw that number creep up. End of 2020, we started creeping into the high fours. 21, we're looking in the fives. Man, you look at end of 21 into 22, we started to see parks selling for more than 6 times gross revenue. And sometimes, depending on the type of amenities at the park, depending whether they were more of a resort type park, depending if they were in a franchise system, did they have water features? Multiple pools, lots of cabins. Depending on that, you could see valuations on that multiple of 6, 8 times. Now those are coming down now, but that's what we were really looking at. And then what we were looking at from a cap rate perspective, pre-COVID, you were probably looking at being able to buy your average RV park or campground for greater than a 10 cap, meaning it was a very investor friendly investment because you were looking at 10 cap plus. A lot of our park owners were buying it substantially better than that. So we were talking about 12, 14, etc. Then what happened is, of course, during COVID, demand started to pour in, private equity money, these funds, investors, these groups started to come in. We started to see valuations skyrocketing, cap rates dropping. So cap rates were all of a sudden down into the single digits, where they were kind of hovering in that 8 to 10 range for quite some time. And now we're starting to see them creeping up closer to double digits for the average park. Certainly, there are, again, still some parks that are trading for lower than that in terms of cap rate multiple. However, many have creeped up into the double digits. So we're seeing parks at sort of all over the place in terms of valuation. Here's where we're at today. There's a good number of owners that have owned their parks prior to 2020, who are seeing valuations and have seen valuations over the past 3 to 5 years really skyrocket, and some of them are wanting to take some ships off the table. So we're starting to see the number of RV parks and campgrounds. Again, the number of listings is starting to increase pretty substantially. But what we're also seeing is that parks are sitting on the market because a lot of RV park and campground owners right now have an idea that their park is worth what they think it was worth back in 21, 22. But the reality is that's not the environment that we're in today. Interest rates are substantially higher. Expenses have grown, meaning our kind of our net operating profit margin is lower than it was probably a couple of years ago before inflation jumped. And also just overall industry valuation has just dropped, right? As there's less demand and more supply, valuations are just dropping. So what we're seeing now is we're starting to see gross revenue multiples going back down towards the 5 range, right? So whereas we were at probably 6-ish on average, we're probably seeing that creeping back down to 5. And we're also starting to see, as I mentioned, cap rates are going back up 10, 12%. So that is a huge factor in terms of valuations today. But unfortunately, a lot of folks whose parks are on the market today have not adjusted their valuation as fast as buyers are adjusting valuation. So we're seeing parks sitting on the market for a long time at this point. Now, there's a couple of interesting things, couple of interesting factors that I think have to be considered in a conversation about valuation. One of which is a big part of the reason that campground valuations exploded like they did is, as I mentioned, there were the private equity kind of these real estate investment funds that were going in and they were buying several parks a month, from mid 2020 until mid 2022. But what a lot of those fund groups realized is that the management of an RV park, the operation, sort of the day-to-day management and operations of an RV park, is substantially more complex than a lot of the other real estate investment vehicles that they were coming from. Meaning, a lot of these guys and gals were coming from the self-storage type of investments, maybe commercial real estate, multifamily housing. Those investments, those investment classes, what they've realized is that those investment classes are substantially easier to manage than something like an RV park or campground. Because an RV park and campground has a substantial portion that, yes, it's a real estate asset, but there is a heavy operational business that goes alongside of that. And so a lot of these investors came into the industry expecting, like, hey, the valuations are better here than they were in self storage. I'll jump into the RV park world. But what they didn't realize is that a lot of these RV park owners were being owned, operated, and run. They were by families that were probably not compensating themselves enough, and these groups came in and they overpaid because they didn't realize that they had to were going to have to expect to hire many more people. Turnover was going to be higher than they expected, etc. So meaning they overpaid because they overestimated NOI. And what we started to see over the last probably 18 to 24 months is a lot of those fund groups are divesting themselves of their smaller properties, meaning campgrounds and RV parks that do gross revenue on an annual basis of less than $1 million. We're starting to see those fund groups divest of those assets. And almost all of those fund groups are now only interested in assets that are doing a million or more top line gross revenue per year, or have a strong potential that they can be expanded to $1 million a year or more. But what we're still seeing is that a lot of current owners, current parks on the market that are doing under that $1 million threshold, they still have this expectation that there's a buyer pool that's interested, when the reality is that buyer pool is a lot smaller because a lot of those fund groups are really just not as interested in those smaller parks today as they were a couple of years ago. So lots of information here. But at the end of the day, valuations are down. They're certainly not down to near the levels that they were pre-COVID, but they're down closer to what we were at sort of at the beginning of the COVID boom. So probably end of 2020, early into 21. That's where we're looking at valuations. But I'm happy to answer questions if you've got them on campgrounds and RV parks, the accounting, the finances, the tax. We're the leading expert for all of those services for campgrounds and RV parks across the United States. So if you've got questions, drop it in the comments or reach out. You can get me at Michael at campandparkaccounting.com or just go to our website, campandparkaccounting.com. We'd love to connect with you. And if you've got other topics you'd like me to see me cover on future videos, feel free to leave a comment. Let me know. We're happy to go over that as we can. Have a great day.